All right. Good afternoon. Welcome back here to Trader Money. Great to have you aboard. We talked last week about how this week was going to likely be consolidation. We talked about it on Monday. We talked about it when the market went above 290 on or 2,900 on S&P futures. Take a look. The last price on the SPY is 289.04. And the open price this week on the gap up, because remember Monday was a gap, is 289.37. So we're talking about 3.3 points on the S&P 500 in terms of where it opened and where it is now, and in a range that's one of the tightest ranged weeks that we have had this entire year. It's not the tightest. There was one other week that was a tighter range, but it is one of the tightest of the year, the second tightest of the entire year. And again, not to be, not something that was too unexpected, not something that is too unusual, especially in the summertime periods, but a reality of what the market is right now. And are there any signs that things are going to change here just yet? No, not at all. And not at all. There are no signs that it's going to change. But one of the things that we have to keep in mind is that there can always be catalysts and different things that will affect create some movement. I know there were a bunch of catalysts this week, but none of them all that big when it comes down to it. Now we do have some stocks with a little transaction on them, but really not many. Most in a nice little kind of consolidation. And if you're bullish, you want to see this. You want to see a little consolidation before a further move up. It tends to lend to a stronger move higher. If you're bearish, you want to see Monday market gap on down and sell on off. And if you get a 20 to 30 point sell off on Monday, it's going to roll downhill. It's going to roll downhill very quickly. So again, that's kind of where the market is, where things sit, right here. But one of the things to keep in mind is during this consolidation, right? A lot of times during a consolidation, we'll see some of the metrics either move more bullishly or move more bearishly, right? And that can be a little bit of a kind of a precursor to what the market wants to do when it ultimately goes, right? A lot of times we'll see a jobs number come in and the market goes, the way you would expect when the jobs number comes in, and then it goes the other way. Well, why? Well, the market's not really looking at the jobs number. It's saying, okay, if we get past this, then I can put money into work, right? And one of the things that we see with most of the market metrics here this week is they've actually moved on higher. They've pushed on higher. They've improved, even though the market itself has been very flat. If we come and we look at the market vibe, let me sign in here real quick. You can see that it's actually gone up a little bit this week. It's down a point today, but last week at this time it was a 3. Today it's sitting at a 6, right? And the market has only gone up 3 points this week. So it's one where the metrics have actually gotten a little more bullish on the week than bearish. We've seen other flat times where the markets actually, where the internals actually get a little worse. This week they got a little bit better. And I think that does lend a little more bullish argument to going into next week. But again, summertime, doesn't take much to change anything with that. All right. Now for the challenge, we talked about a few possibilities this morning. JP Morgan, possible bearish trigger. JD, possible bearish trigger. Both of them consolidation risk just too high. We have an Alcoa 3-7 crossover to the upside, but consolidation risk is just very high. And so there are no new triggers here this afternoon. That leaves us on a week where we've seen 2 triggers. And again, I want to see an average of 3 to 5 a week. So, being at 2 this week is a little low. We weren't able to trade 1 just because of the ridiculousness of the options there with it. And then with Verizon, currently am running with Verizon, so let's go take a look. The option value on it is $260, and the price is $58.17. So let's come throw that in here, $260. And then $58.17. We're $1.30 away from our profit level, right? And, so this week, on a $2,300 trade, we've packed in about $700 worth of gains. Nothing, nothing too fantastic there, but I guess better than a red number. And if we look at Verizon's chart, it's just kind of, just trickled on up since we've gotten in. It really hasn't made much of a move. I mentioned yesterday it'd be nice to see a gap above 58 and go. And you know what? We didn't get the gap here today. It is trying to push above 58. But, it's still something I think has a very legit shot of pushing even into the 60 and maybe even breaking out from there, here on it. Obviously, we'd adjust the position when it hits its first target, but I do think this is something we could possibly ride for a little bit longer. Now, Verizon has something interesting coming up here, and that is Tuesday afternoon. Verizon is going to have an analyst day. And, this is where, the company shares, different things that are going on, different things that are happening. And, the analyst will, be there. Here we go. The sell-side analyst meeting on Tuesday, June 18th. Presentation by the CFO and the CEO there, and it'll be at 5:00 Eastern. So it'll be after about an hour after the market closes here. And these things can sometimes create bigger moves than earnings events, right? If we go look at Disney, for example. It's really easy to look at the chart and go, oh, yeah, of course, they had earnings right here. I mean, look at the big gap up. I mean, that was earnings, right? No, earnings were right here. This was the earnings report right here. This was the analyst day, right? And so, bigger moves, and we see analyst days where there's big downward moves too. I'm not looking at this from a directional standpoint, just hey, there can be a pretty sizable move when it comes to these analyst days. So, again, we have the auto exit if the position is red come Monday afternoon, where we'd have to be out. But if the position's green, come Monday afternoon, and stay as green, or, we don't have to make an adjustment, this is in a position to hold through that analyst day Thursday afternoon. So we'll definitely add a little bit of risk to the equation with that, and we may alter it just a little bit. I said until the challenge is running above 10,000 in gains, I don't really want to hold earnings reports. I'm not going to buy stocks or buy signals where the company is going to be reporting earnings within the time period of the option. We're getting closer to the 10K gain mark to where, okay, we could take a little more of an aggressive approach. But with Verizon, we'll see kind of where it is next week. Maybe something worth trimming a little and running with the rest and going from there. But, again, some of the movement in it between now and then could make any kind of decision moot. So not going to make it right here. Okay. Alrighty, so anyway, that's where the challenge sits heading into the weekend. We've had, 1, 2, 3, 4, 5, 6, 7. We've had 8 trades. It's only been 8 trades. It's been one of the slowest starting challenges that we've had in a long time in terms of number of trades. But we've been able to pack in about almost 8,000 in gains and be able to pull out the initial 3,000 out. So that's not too bad. Our trade size has been steadily increasing here as well. We've had a pretty good ratio of gainers versus losers here with the trades, but we haven't had a lot of stocks really go and hit their price targets. We're actually running under the real rate for that, with how things have traded. And let's face it, the market itself during this time, where we've had fairly few signals, the market itself is up just slightly from where the challenge started. And we've had kind of a couple down days, couple up days, and, we were able to kind of take advantage there, a little with gold on the down, a little with Visa and Under Armour and some of the others on the up. But really just, typical type of summertime action. And, not something that, was unexpected. In fact, we did expect some of this because of the fact that we did expand the watch list, to go into this time of year. And, it's something where I expect more of that. I don't expect a real material change in the market environment. And, that is just something that, unless we get some sort of major news, it's just going to be the way that it is. I would not be surprised to see the market print a new high here, this month. I would not be surprised to see that come in at all. But I do think a new high would get sold off a little bit and, then get bought back up and then get sold off. And, we're going to go through this bob and weave type of period here. I think for the majority of the summer. And then we'll get hit into earnings season. And earnings season, I think, is going to be very interesting. And I don't think this earnings season, I don't think it matters what companies say in terms of what their earnings are right now. I really don't think so. In fact, if I'm a corporate CEO and I'm putting together earnings and sitting down with my CFO and saying, okay, what do we do? Do we want to kind of defer some earnings to later quarters? How do we want to account for some of these things? I'm basically saying, hey, let's defer as much as we can out to make future quarters look better. And this quarter, can be as bad as it needs to be. Because the market is going to give companies a break for a bad quarter. Why? Because the Fed's going to hike. The Fed's going to raise rates in the future. In the future, we're going to get a trade deal. All these kind of variables to kind of sweep any kind of bad news under the rug. That's kind of where the market's mentality is. I'm not saying it's right or wrong or anything like that. That's just where the market's mentality is. And so I do think companies, whether they beat, miss, whatever, the stocks aren't going to trade based on that. I think they're going to trade based on the guidance for the rest of the year. And you're going to have a company come out and say, you know what? Right now the numbers are pretty awful. But you know what? The next 2 quarters, they're going to look great. And that company's going to soar. And you're going to have a company come out and they can report fantastic numbers, blowout record numbers, and they say, but the next 2 quarters are going to be struggles. That stock's going to get sold. It's going to get sold hard. And I think that's what we're going to see this earnings period. I think the ones that kind of raise guidance into the end of this year are going to be the one that fund managers are chasing, the hedge funds are chasing, and the ones that, lower guidance, they're not going to be able to get out fast enough when it comes to those names. So I think this earnings season is going to be really simple in terms of understanding the dynamics of the companies and what's going to happen going forward with them in terms of the path of least resistance. It should be kind of a fun one, and hopefully for the challenge we're well up over 10,000 in gains, and can ride a few of these earners and a few of these signals that come in ahead of earnings and take some of that risk during this earnings season. Okay. Alrighty. I titled this video "And More Consolidation." Why? Because, well, it is. There's just more consolidation. And, at some point, you can only say that word so many times and, look at so many charts and see the exact same thing. And while, yes, there are some charts that are different, right? BYND is definitely one that's different. Disney, gold, right? They're definitely different charts. They're relatively few, far between. And I don't think there's a huge different story with them that we haven't already discussed, here this week. Okay. Thanks for hopping on. Thanks for being with us here at Trader Minute. Have yourselves a fantastic weekend and look forward to talking to you on Monday. Take care.